And so that stock got pummeled yesterday. And as soon as you saw it down 40, 50%, Bitcoin began to uptick. And it started to go better and better and better. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. Think about a marathon runner. You just ran a marathon, amazing amount of distance there for those of you that do that, all the credit in the world. But you do need a break, right? You can't just run another marathon right after. I'm still in the camp on a macro basis, by the way, that we still see a recession in the second half. We're going to cover a lot of stuff today. There is a ton to go over. We have crypto ripping. We have the banking stocks pummeled. As of yesterday, FRC dropped 50%, which again is a regional bank after basically I'll tell you exactly why they dropped 50%. Bottom line is that's helping crypto catch a bid. We're going to talk about earnings announcements. We have durable goods orders out there. So there is lots going on here, and I'm here to walk you through everything that you need to know to make money. All right, so Bitcoin is ripping to the upside, just hit resistance at 30,000. Now remember, 30,000 to 30,500 is your key level of resistance. You can see what's gone on. Basically, since yesterday, when FRC, all right, First Republic Bank, when they basically had their earnings announcement, they came out and said that, hey guys, we lost 40% of our deposits in the last quarter. In addition, we saw essentially our business stagnate. All right, that was not what Wall Street wanted to hear. 40% is a bigger number than Wall Street expected. They basically did not take any questions from analysts in the conference call, and they just said done. And so that stock got pummeled yesterday, and as soon as you saw it down 40, 50%, Bitcoin began to uptick, and it started to go better and better and better. This is your 30,500 level. That is essentially your line in the sand. Like I just said, 30,000 to 30,500, that's what you're keeping your eye on. If we get above 30,500 and we close, you want a daily close, and then you want multiple days, I say 5 to 7 days above that 30,500 level. Now you have a confirmed breakout, and you likely could head higher. Aside from that, be very skeptical of this move, because if the banking crisis does not get worse, this resistance at 30,500 to 30,000, that could ultimately end up being a top, and we still could see Bitcoin moving back to the downside. Last time we hit 30,000 to 30,500, I bought BITI, which is a short ETF. When you buy it, you go short the Bitcoin futures. I covered that for a nice gain, obviously, or I sold it for a nice gain when Bitcoin pulled back. I've now re-entered that trade, and I'm seeing if we can't get a good pullback on Bitcoin off of this technical resistance at 30,000 to 30,500. Okay, so let's go back into the charts here. Let's look at Ethereum. What do we have on Ethereum? Ethereum is rallying, but look at the chart here. Look at where we're hitting. We're hitting resistance on Ethereum here. This upsloping trend line, a beautiful upsloping trend line. This is the key point. Now, one of the things I want to mention here, look at how Ethereum is not at the recent highs like Bitcoin is. What does that tell us? It tells us that Bitcoin is your pure play when the banking crisis is going on. Sure, you're seeing a bid in Ethereum, but it's not the same magnitude that you're seeing in Bitcoin, because Bitcoin is a pure play. Always remember that in 10 years, 20 years with Bitcoin, it's the pure play, just like gold is the pure play. If I had to put it in comparison, I would say Bitcoin is to gold as Ethereum is to silver. All right, so watch this level around 1960 on Ethereum. That is going to be a very pivotal level here. Let's see if we get through that. I'm still in the camp on a macro basis, by the way, that we still see a recession in the second half. You're seeing economic news continue to weaken, the jobs number continue to weaken. All this stuff is continuing to show us likely recession. By the way, the Federal Reserve actually told us a mild recession in the second half. Like I've said in so many interviews since I said this the first time, if they're saying mild and they said transitory, and look at what we got, all right? They said transitory inflation, we got horrible inflation. They say mild recession, it's probably going to be a little bit worse than mild recession. So they're still hiking here, guys. They're still tightening the noose, if you will, around the economy. If we go to the SPY, all right, here's the SPY chart, and I have a lot of little trend lines on this chart from day trading. But bottom line is, what we can clearly see here is that we are gapping up on the spiders. But this is what's interesting to me, right? Is that even with all this good news on earnings, look at the spiders. We're only getting back. This is where we closed yesterday, right here. And this is where we are today. You're only up about $1 on the SPY. this market is looking for reasons to sell off in the equity side. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. All right, even though you're seeing a little bit of a bounce here, a lot of that bounce in crypto is a relation to the banking crisis and the safety trade, right? We see the Bitcoin leading the charge. But bottom line is, you're not getting a very oversized move in the QQQ, and that to me would be concerning going over your next couple weeks of trading, especially ahead of the Fed next week, where the Fed is likely going to stay relatively hawkish and hike by 25 basis points. You guys really focused on understanding how important even numbers. By the way, that's one of the reasons why I looked at the 30,000 area to 30,500 on Bitcoin. By the way, look at what Ethereum did. Ethereum pierced 2,000 recently, right? It took out that previous high barely and then sold off. There's a tendency in markets, and this is psychologically based in human nature, for us to hit key levels and pierce them. All right, you have stops there. You have people that will jump on board at those levels. Think about how many people jumped on board on Bitcoin when it pierced 30,000 thinking it was a breakout. Yet ultimately it dumped out, took a lot of them out. If we look at Bitcoin, by the way, it has pulled back off that 30,000 level very slightly though, trading back at 29,850. All right, so again, we know 30,000 to 30,500 is resistance. That's really all you need to know. Remember, a technical trader doesn't care necessarily whether it's where Bitcoin's going in the next 6 months or 3 months or even 1 month. It's where's the resistance near here where I can tell if it's going to go higher or pull back. And right now you're up into resistance. You're just underneath resistance. Therefore, as a technical trader, you favor a pullback. If it gets through that level, you start to go into neutral. If it stays above that level, you go bullish. It's very simple like that. It's no emotional trading. It's pure and simple. Follow the levels. Let the charts tell you. I always tell my traders this, and this is important to understand, is that the charts, when most people begin looking at them, it looks like a whole hodgepodge of nonsense. Really what it is a foreign book, a book written in a different language. And it's up to you to learn that language. And when you learn that language, you start to get insight into the most probable. And this is important. It's not the guaranteed move. There's no such thing in trading. All right. Every day I'm out of the money on a trade, or, with all the trades I do, there's always a trade, I'm losing here, I'm making money over here and here and here, but there's always going to be a little bit of a loser. So the point is that it's all about probabilities. If you do 10 trades in a day, you want to win 8 of them. 2021, everyone was making money in crypto. Everyone was making money in stocks. That's ultimately not feasible long term. Eventually, you pick a bad one, just like anyone, just like I do. Eventually, I pick a bad one. And ultimately, you go broke when you bet the farm on it. And that's the problem. Make your millions, and you will make millions if you follow the recipe. Technical trading, personal discipline, position size. Those are the ones you want to follow. All right, if we bring up gold on the charts, gold to me continues to be in a sideways consolidation pattern. Ultimately, this is the beginning of bullish consolidation that will lead us through the all-time highs on gold. But I still think you're due for a pullback to around the 1900 to 1915 level. If I zoom out the charts, and this is all charting again, just letting the charts dictate to me. Short term, we're extended. You just need a pullback right in this range, about $100 on gold. Then I think you bounce off of that and you start making new all-time highs. You break through 2100 and you're probably headed towards 2400 by end of year. Think about a marathon runner. You just ran a marathon, amazing amount of distance there for those of you that do that, all the credit in the world. But you do need a break, right? You can't just run another marathon right after. You need a break. You need to recharge. So when a chart makes a huge move up or down, it needs consolidation. Consolidation is a runner's break. And that's a way to recharge the battery before continuing its next marathon. Dollar again, which is adding fuel to the fire today to Bitcoin and the metals, is down. Yesterday, we had a sharp move up on the chart. Today to the downside. By the way, I ultimately do think the dollar is going to go lower. Doesn't mean it can't bounce in the short term, but I want to show you this trend line here. If we bring up this trend line, look at this. Look at this right here. All right, drag this line out. All right, now you might say, okay, that's support, and you're correct. You are absolutely right. This is support. But the methodology that I teach tells you that the more you hit a trend line, the more likely you are to break down through it. So here you hit it once, 2 times, 3 times, and you're on the verge of 4. Usually by 5, you're in the borderline 50-50 that you could break through it, 50-50 odds. All right, remember, everything I do is probability based, just the nature of it. So what this tells us is that if you keep hammering on this line, eventually the dollar is going to break down. Okay, when it starts to break down, what is that going to tell us? Well, it fits right in with the narrative that I've been talking about, that we likely see a recession in the second half. Because if we see a recession, what is the market going to factor in? It's going to factor in lighter easing policy by the Federal Reserve, and that ultimately means a weaker dollar. That's like a long-term narrative that, yes, eventually the US dollar will not be the reserve currency of the world. But again, in today's dollars, that's not tradable. Like you'll end up doing a disservice to yourself, in my opinion, by pulling out of that scenario and positioning yourself for alternatives. Bitcoin, again, big pop, but we know we're into resistance here. Let's keep an eye. Look at that, 29,800. That short starting to play out on the BITI by buying BITI, which is short the Bitcoin futures.